If your bank ever closes your account with no warning, it feels personal. But it's usually automation and risk rules. Here's what you need to know. A lot of what people assume about account closures is just wrong, and that confusion makes the situation worse. Banks often don't have to warn you first, and they don't always have to explain the exact reason. It's rarely a simple customer service issue, and it's not limited to obvious wrongdoing. Your money also doesn't automatically get seized, but access can be interrupted while they decide what to do. And one bank's decision can influence how other banks view you. Most surprise closures start with monitoring systems that run all day, every day, looking for patterns that don't match your normal behavior. An alert doesn't close you down by itself. It flags the account for human review, but the reviewer is guided by risk scoring, not your personal story. And because investigating takes time and creates liability, many banks choose de-risking, meaning they simply end the relationship. That's also why they may not explain why. Even then, they still must return your funds, minus valid fees or losses. The triggers are often boring, but they look wrong to a system that's trying to prevent fraud and losses. ACH velocity is a big one. Lots of incoming and outgoing transfers in a short time can look like money mule activity. Identity mismatches, like name variations or address conflicts, can force a review even if you did nothing shady. Disputes add up fast, because each chargeback is a loss risk for the bank. Repeated overdrafts signal stress, and using a personal account for business-like volume can get you exited. Even odd ATM patterns, like constant out-of-network withdrawals, can raise flags. Once a bank decides to close the account, the effects can hit fast and in the worst order. Card access can shut off immediately, so everyday purchases fail first. Incoming deposits, including ACH transfers, can bounce back to the sender, which is a real problem for payroll. Bill pay may keep trying for a bit, creating late fees if you don't move it. Checks can be rejected, and the remaining balance may be held while they clear returns and disputes. The two moves to make right away are opening a new account and moving your cash and payments over as cleanly as possible. Your goal is continuity. Keep income, bills, and documentation under control while the old account winds down. Open a backup account before you need it, then move direct deposit quickly so your next paycheck doesn't get kicked back. Update autopays and any bills tied to that routing and account number, because those will quietly fail. Request written closure documents so you have a paper trail for employers or billers. Track any holds and the timing in writing, including dates and amounts. If you get stonewalled, escalate with written complaints to the CFPB and your state regulator. A bank can close an account without warning, but they still have to return your funds. Access just may be delayed by holds and pending returns. BankingHub helps you find accounts that fit how you actually bank and shows the real dollar impact for your balance. Free, takes 2 minutes, and the link is in the description.